Today on the Stuff Your Bookkeeper Isn't Telling You, we're going to talk about what business owners should learn from Peloton. Peloton just released their results and they lost almost $2 billion in net income. So we're going to talk about that and what business owners should learn from that. So stay tuned for today's episode. So welcome back to the Stuff Your Bookkeeper Isn't Telling You. I am Terrell Turner, and this is my amazing wife and co-host of the show, Lola Turner. Welcome back, Lola.
Thank you for having me on the show. Happy New Week, everybody.
So this week, we're talking about a topic where we're actually going to start doing a little something different in the show. It's bringing in some current event stuff because something that a lot of business owners, I think they miss out on is how relevant some of these very real big business stories, how relevant they are to their business. Because a lot of times people are like, oh, Peloton lost $1 billion. That sucks for them. But what does that have to do with me?
Right. I have my own business to focus on. I have my $30,000 a month target I hit. I don't have time to focus on $1 billion right now. Okay.
And I think for a lot of business owners, one of the things that I tell them is, whether you are a $1 billion business yourself or whether your business is only doing a couple $100 million, or let's say if your business is only doing, let's say, 50 million in revenue on an annual basis, or even if you're just down to, let's say you're only doing, let's say 20,000 a month in revenue or even less. I mean, paying attention to those things that pop out, I think, can give you a lot of insight. It's one of those things that you and I talk about a lot where I'm like, it is so much easier to learn from the experiences of others who are further ahead of you than you having to learn it yourself.
Yeah, and I think it's not just even learning the experiences. I think another point is also just a good indication of where the market is headed, because I think sometimes people don't realize that a lot of these big companies, when things like this happen, it trickles down to the smaller businesses. So you might think, right now it doesn't impact me, but trust me, the way the economy works and the way just the capital market works, it will come back somehow one way or another to impact you. So it's important to just, not be completely engrossed in it, but to know enough to be dangerous.
Mm-hmm. One thing I'm curious what your experience was, because, my experience of graduating from college, of working in public accounting, then working for some smaller organizations and then going back to Fortune 500 companies. I feel like when I got to General Electric, I was at a high enough position to where the things that I did on an everyday basis were kind of like, man, these are all those case studies that I read about in school or you hear talked about, to where like I finally felt like some of the stuff we had covered in school was finally relevant, because at those smaller companies, I was just like, I'm not seeing any of the scenarios that I've studied in school. But when I got to GE, it was just like, hey, it's almost like my college curriculum was written for people to go work at big companies like GE and other Fortune 100 companies.
I would say from my experience, I think it depended on the role. Like, I think there's even some roles that are high executive roles or higher on the ladder that still don't really have an understanding and a concept of what their role, how what's going on in the market directly impacts them. I'll give you an example. So I think for me, like, during COVID, I mean, my job, I was in commercial finance at the time and working for a Fortune 500 company. And at the time, supporting an oil and gas business. So the drastic swings in oil and gas prices, you could see as the price of a barrel went up or went down. I think there was a point during COVID where they were actually, I think the price was like in the negative. So you would actually have to pay to buy. I mean, just ridiculous things like that. But I think it really depends on the roles, because I think the closer you are to the product, the more of an impact you feel, assuming you're really dialed in with like the sales team and some of the operational guys really understanding, because you start to see that impact on your P&L a lot quicker than someone who, for example, works in HR would, or someone who works in another operation would. But like, I think the closer you are to the operation is what I found, is the quicker you were impacted, because you're almost having to take, like, as prices were going up, you're almost having to immediately adjust prices to compensate for that. And so I think the closer you are to the operational roles, the quicker you feel the impact of that, and the quicker you have to kind of pivot to make sure you're not losing your money, or not losing as much money as these things are being done.
Okay. No, that is I think that is a very fair perspective. So
Mhm.
the thing that we wanted to talk about, that we discussed in the intro, is with Peloton, and there
Mhm.
are so many layers to kind of unfold. So let's kind of go kind of piece by piece,
Yeah.
because there may be some people who are familiar with Peloton as a brand name, but they
Mhm.
don't really know it as a business. And I think that becomes a very important piece. Is one thing to understand the brand, but do you understand the business that brand is associated with?
Yeah, and I think you make a good point, because before we started our business, to be honest with you, I don't know that I was really thinking about, like, when I would hear things on the news, I'm like, oh, okay, cool. Or even and before doing commercial finance, like, I heard things and I was just like, okay, so I know Peloton, I know that they're bike company, but right now, whenever I hear anything on the news, I'm always like, oh, okay, so what does that mean? Like, how does that kind of the business, how does the business behind that work? Right. And I'm always curious about that. And I think part of that is just because of, being a business owner ourselves. It's always intriguing just to see, okay, how do they operate it? What's their business model? So I'm kind of eager to talk about, first of all, Peloton, when it was founded. You want us to dive a little bit just into the history, and then maybe talk about the business model for those that don't know?
Yeah, yeah, we can dive into that, because I think that's such important. So I think for Peloton, like, I don't know the technical, like, the what year was it founded?
It was founded in 2012, so they haven't even been around for
Okay,
10 years. Like, that to me is
okay,
pretty impressive, and you kind of see why when we talk about the revenue. But so they've been around for 10 years. I think the founder was actually an executive of Barnes and Noble, and he left Barnes and Noble. And I think pretty much the story behind it, I think, was he found, which I can completely relate to this, as someone who does group workouts, he found that he was more engaged and more consistent when he worked out with the group versus when he just went to the gym. And so I think he was inspired to create something that would kind of have that group workout accountability from wherever you were. So he founded Peloton, and I think since then, I mean, they started raising, which you'd probably know more about this, Terrell. I'm not really familiar, like startup Series A, Series B, but they've raised a lot of money. I think like over like $1 billion+ is what they had raised before they went public, and they went public in September of 2019. So like right before COVID started. And so since then, the company's kind of gone up and down. They grew a lot because, I mean, at that time, everybody was locked up at home when COVID started. So, good way to exercise. And then since then, I think they went public in 2019. The pandemic happened, and then the business kind of just took off.
yeah. So I think for those that are listening, I mean, when you talk about like the pre IPO or initial
Mhm.
public offering, and probably the best way to think about that is when they start trading on like a major stock exchange, meaning like the everyday person can go buy shares of the company. Prior to that, when you're a private company, the way you raise capital is by these private investors or institutions, and you go through like series A, B, C. Some I've seen it go as far as like a series F. But a lot of times what's happening in those stages is you're raising money from people who believe in where the business is going. And after you get past kind of series C, all of
Mhm.
those people believe that your business can go public. So they're like, hey, we're giving you money because we know that you're gonna, eventually go to trade on a stock exchange. So then they can cash out at that level. Now,
I have a
one
quick
of the things.
question.
Oh, go ahead.
Can you maybe just explain what's the difference just between A, B, and C? Like as you progress, what did and I know
Yeah, so I mean,
this isn't like a stock episode, but I'm curious.
one way to think about it is like A is gonna be like A is probably your that's probably the riskier stage of the business, meaning like you don't really have a ton of like recurring revenue in place. Like
Mm,
those people are taking a bigger risk
okay.
because you're really, really early in your process.
Okay.
When you get to B, you have a little bit more of a business kind of established. Now you're just trying to grow to the next level. Then when you
Hmm.
get to like C, D, E, and F, like that's where you really have some really good traction going. You just need more capital. Like, for example, like people who are kind of like between C and F,
Hmm.
they're probably like trying to go international or trying to take it global. Whereas
Okay.
people who are A, you're really just trying to, you got a good product, you just need to get it to the market. B, you just need to expand like, nationwide. C through
Hmm.
F, you're trying to go global and beyond.
Got it. Okay, that's helpful. That's helpful. All right. Do we want to talk about the business model? Peloton's
Yeah,
business
so
model?
so I think that one becomes a very important one. And I do think this is an important piece for when you look at a business like Peloton. I think sometimes people may look at the financials and because I guess when you look at Yahoo, and I'll say, Lola, you have the image of Yahoo, like when you go to, because I would say for a lot of these publicly traded companies, you can go to Yahoo Finance and you can pull up, what's
I'll
going
share.
on Yahoo Finance, and it'll quickly show you, hey, what the financials look like for, when you look at it that way. But I do think that, a really good thing to see, because even if you zoom in a little bit on the revenue, like most people look at it and they see the revenue and they're like, oh, okay, all right, they did, in June, in 2021 they did 4 billion. In 2022, the last trailing 12 months, they did like 3.8 billion, and which
Mhm.
I think gives you some aspect if the company only had one product. But I
Right.
think the better way to look at it is to actually look at their financial statements, because in the financial statements is where they start to break it down a little bit more, because you get to see how much comes from actually selling the bikes itself and then how much comes from the subscription. Because what a lot of people don't understand about the business model of Peloton, they may think that Peloton is just a bike company, whereas
Right.
no, they're really kind of like a bike and like group training class company. That's where the subscriptions come in. And that becomes very important, because what you'll notice is a lot of times the profit margin on the subscription is much better than the profit margin on actually selling the physical product. Because
Right.
if you're just selling a product, I mean, you got to deal with things like supply chain issues,
Hmm.
material costs. But if you're doing a subscription model, a lot of times those cost constraints, especially if it's a subscription model that relies on technology, your profit margins are going to be much higher. So for one perspective, you can look at Peloton and say Peloton is like two separate businesses that came to form as one. One business is the selling of the product. The other business is the subscription for like the group training, or people that want to get access to all of those training, those classes, and all the metrics and stuff that come with a subscription model.
Yeah, and I think another thing here that's also interesting. I just did the quick math. So, like the margin for the the actual product is like 28% in 2021. So, like if you take your revenue minus what the cost of revenue was, you get a margin of about 28%. But the margin, like you said, Terrell, for the subscription, completely different. I think it's like 62%. So
Yeah.
you're walking away with a lot more money in your pocket if you're doing the subscription model or subscription revenue than you do from actually selling the Peloton. So most of the revenue comes from that recurring, or most of the benefit to your margin comes from the recurring revenue. Even though you have, the numbers, what, like, is that what, 3-4 times almost higher than the product sales than subscription, but you're keeping more of your revenue. than you would if you were just selling the machine. So I think that makes like a big difference for a couple of reasons, which we're going to talk about.
Yeah, I mean, because it's one of those things. Like I was teaching a finance class last week, and one of the ways that I was explaining this to them, because a lot of them, they weren't accounting and finance background, but one of the ways
Mhm.
I was explaining it to them is, so if your profit margin on the bike, on the actual physical product, the bike or the weights or whatever it is, whatever product you're getting, if your profit margin is 28% on that, but your profit margin on the subscription is 62%. What that means is for every dollar you get from a customer for a
Yeah,
product, you only keep 28 cents on every dollar.
that's a good way
But
to explain
for
it.
the subscription, you get to keep 62 cents on every dollar. So, from a business standpoint, the question is, if I want to grow this business, which one do I want to sell more? The situation
Exactly.
where I only keep 28 cents on a dollar or 62 cents on a dollar?
That's really good. I think that's like a perfect way to explain it for people that are non-finance people. Because I think sometimes when you talk about margins, people are like, okay, what does that mean? Like it's the money you get to keep. And it's the money, I guess I would define it as this is the money you get to keep to use to do other things in your business. And I'm always going to say this, and this is something I always tell like my friends that are business owners that are not really like finance people. It's like, I don't care how much money you make. If you don't get to keep any of it, it's kind of useless. Or like if you're not, you know what I mean? Like it's all about it's the money you make and the revenue you make is great, but what's even better is the margin and what you get to keep when you're running your business. So yeah.
And I think that's important because I mean, when you read a lot of news or you hear about companies, most people describe themselves by the size of their revenue. Like, oh man,
Hmm.
this is a $10 million business. And I hear a lot of people say that
Oh
about, oh,
yeah.
our business did 20 million. And in my head, I'm thinking like, that doesn't mean anything to me. How much of it did you
Exactly.
actually profit? Like, how much did you get to keep? Because that's what
Exactly.
matters more.
Exactly. Because at the end of the day, and it's almost like there's the net. I don't want to go into it too much, but there's your gross profit and then there's your net operating or net income at the bottom line. So like I guess your gross profit is what I would say. What do you get to keep to help you run the business, right? You can use it on selling, marketing, research and development, whatever the expenses are. And oftentimes there isn't, you see the companies that really do grow and do well are companies that have a pretty big emphasis on gross profit. Like we need to make sure that our top line or the money that we make trickles as far down as possible to help us actually run the business. Because what you don't want to do is have to go borrow money to run your day-to-day operations, right? You want to take money to actually invest to grow the business. You don't want to take money to sustain it. So I think like operating income becomes such a big deal and like or gross margin becomes such a big deal, sorry. And I think that's why Terrell, like it's always funny to me when people are like, yeah, this is like a $50 billion revenue company. And then you look at their gross profit and it's like 10%. And you're like, what are you guys doing?
Yeah, because I will say now, different people. Now, this is something that may be very controversial to some people. Some people will get in their feelings about it or whatever. But so what? Who cares? I'll say it anyway. It's one
Okay.
of those things that I would look at like a company like Amazon, where a lot of people I mean will say, "Oh man, I would really buy Amazon. Amazon's great business." But when you look at Amazon's margins, they are like super, super low. Now, I'm not saying that you shouldn't own Amazon. I'm just saying, like, if you're trying to own Amazon for the short term, it's probably not a good bet because they're not,
Agree.
I mean, they're playing a longer game. Like, I just finished reading this book called The Four. I will say, if you're going to read the book, it's about Google, Apple, Amazon, and Facebook. If you're going to read it, you got to prepare yourself because in some parts of the book, the author does sound like a little bit of a pessimistic hater in some of it. Like some of it he is a little bit petty. I'm just gonna be honest.
Book review.
um,
Okay.
he does provide some good insight, but I do think some of it is just like, all right, that's a little too much of your personal opinion. That's not
Right.
based on fact. But I do think as one of the things that he did bring up in there is that Amazon's one of those companies that's playing kind of like the long game, meaning they're willing to take a low profit now because they're trying to funnel so much business that in some cases they're intentionally trying to be the low cost provider to pretty much box out the competition and then introduce their own version of the product, which has a higher profit margin. Like one of the things he
Exactly.
talks about is like how they did it with batteries. Like, right now, I think in what he cited in the book, at one point, your Duracell, your Energizers used to be like the main batteries that people buy. Now, I think he cited in the book, and I haven't fact checked his number, but his number was, like 3/4 of every batteries that are sold are now Amazon batteries, meaning
Mm,
Amazon accepted very low margin for a long time to really see like, hey, this battery market is pretty good. Then they created their own version of the batteries. Now they get a higher profit margin because they're selling their version of the battery. So part of it is strategic with Amazon. But I think I say all that to say it's just like when you look at a business like Amazon, I think it's why you see Amazon getting into more digital products a bit more because profit margins are higher because Amazon is like, from a revenue standpoint, is enormous. But then when you look at the bottom line and you say less than like 5% profit, like they're selling billions and billions of dollars, but they're keeping like 5 cents of it, or they're keeping
yeah.
like 2 cents of it. And I think it gives you a different perspective. Now, if you're a business that's working a long strategy, I think it makes sense. But if you're a smaller business, you really do need to ask yourself that question you were asking, Lola. It's, how much of this am I actually keeping?
Yeah, and I think I'm actually curious to see how Amazon has performed in terms of margin over the years. And I know I don't want to get sidetracked because we're not talking about Amazon, but I'm actually interested to see if how well that strategy has worked because I know that they're doing the same thing in the fashion industry. So they have like this Staples, I think it's called Staples by the Drop or the Drop by Staples, where they partner with Instagram fashion influencers or fashion, yeah, to launch their own lines. And as a lot of people know, like Amazon is pushing to have people order products, through Amazon, right? Eventually with the intent to basically launch their own line and be able to sell their own products. So I'm curious to see how that works, but very valid point. I think if your intent is to grow long term, then it makes sense. But for the business owner, small business owner, especially if your business is less than 5 to 10 million, like you might not have the cash flow to be able to sustain running and managing the business like until you beat out your competition. So
Honestly, I mean, I think if your business is less than 250 million, if your business is less than 250 million, you may not have the cash flow to be, hey, we're going to be the low cost provider. Because
yeah,
also, I mean, there is a little bit more to it because from an Amazon standpoint, what Amazon says is their product is not the thing that you are buying. Their product
exactly.
is the convenience.
The
So
platform, right,
what they're really selling is the convenience because
right.
they're like, you can go on their platform to buy Energizer batteries. You can buy
Hmm.
Duracell, or you can buy, the Amazon version of the batteries. What their product really is the platform. And I think
Right.
for most business owners is when you start looking at your business model, you have to really ask yourself, because I think is how are we really making money? Like, why are people really coming to us? And I think to what you were saying, as far as like the story on with Peloton, when the founder realized, hey, I work out better when I'm in a group or class, which
Hmm.
means the bike itself isn't your real product
Right.
because that's not really what drives people to actually, go to Peloton is because of, hey, I get the bike. Because there used to
Yeah.
be that Lance Armstrong bike. There used to be the other type of bikes. I mean, there's a ton of different bikes you can go and buy, but it's
Yeah.
just like, what is different about a Peloton?
And I think that's why they also diversified, right? Because I remember, or they changed, because I remember when Peloton first came out, and I remember me trying to use it in the gym, like you could only do the classes on a Peloton bike. And then they changed to where they expanded it where you could do it on any other bike. And I think that was then the other thing where maybe the team started to realize like, all right, it's more so about the community because honestly, like even when you see the ads for Peloton now, the focus isn't on the bike. The focus is on the community where they show like the instructors and like everybody else, like people dialing in and tuning in from all over the world. And so they're focusing more on promoting the community, which I think is great. And I think that's a good way to like strategize. But to your point is like, as a business owner, you need to be focused on what are people coming for, right? Don't focus on the wrong thing. Like if they're coming for the experience, then maximize the experience that they get. If they're coming for the product, then how do you deliver this product in the best possible way to the customer that is also cost effective for your business? Because I think ultimately that really will be what people remember. And I think like we're seeing it like with Peloton, where it's like there's a focus more so on the experience. And so when people do Peloton, because I remember when I did Peloton, my butt was hurting afterwards, but I really liked the class. Like sitting on that bench for 45 minutes, it was painful. However, after the experience, I was like, okay, like I really enjoyed the class, because you really feel like, you're being hyped up and stuff. And I like the group classes. And so I think they did a really good job, or that specific instructor did a really good job of making me want to come back, even though it was uncomfortable on my butt originally. And I think ultimately that's kind of the experience you want to create with your products as a
The
business
question
owner.
is, did you go back?
No, because and let me tell you why. No, let me tell you why I did not go back. Okay, in all my defense, I did not go back because this was at the time when you had to use the Peloton bike, and the only place where they had a Peloton bike was in the gym, where the building that I was working in. And I would go into the office like 3 times a week. So I'm like, I can run at the gym, at the Planet Fitness, or I can go drive 15 minutes to go use this Peloton. So I think if I had realized, because I didn't realize until recently that they changed the strategy where you could use it on any bike, if I had realized that more, before that, I probably would have gone back. But
Yeah.
no, I did
No,
not return.
I think that's a good point, because there was a Peloton commercial that I saw where the person's on the Peloton bike and doing class, and there's a phrase that the instructor keeps saying, and then later on in the commercial you see that person on an actual bike outside, and he's pedaling, and then his wife pulls up and his wife says that phrase that you hear in the Peloton class, because I think the from the business model perspective of realizing that, hey, if we center all of our business around this physical product, the people can only use it in one place.
Exactly.
Whereas when you switch to, hey, the product is really the community, people
Exactly.
can take that feeling with them
Anywhere.
wherever, to
Right.
where even if you're on your own bike because you want to get outside and you want to ride, and if you're outside but you're thinking about, man, the experience you had with the class, with the group or whatever, I think that's where a lot of businesses are trying to get to, is like, how do we create a shift our attention away from, we're not just this product or just
Right.
this service, we
Right.
are a community. Because I think even for us, that's one of the things that I think about myself is, how do we do that in, we offer bookkeeping and CFO services. How do you build a community around that, community feeling around that? I mean, especially when, usually bookkeeping, tax, and CFO services tend to be a bit siloed, because, that's people's very personal financial information. They don't want to
Exactly.
share that in a group normally, but it's just like, how do you kind of build what Peloton did, transition from just the product to more of a community that has the product in common? It's just like, how do you kind of transition to that? Any thoughts on that?
That's a really good question. And I think the thing that I immediately thought about is people always, I mean, me included, people always like to tell success stories, right? People always like to tell stories after they come through it. Like, man, it was just so bad. And before, like, if I think about, for example, just like, I'll use an example. Like, I recently left a review for this place called Bird Boot Camp that I go to. Shout out to the Bird Boot Camp fan. They are not promoting this episode, but I'm just going to give them a special shout out. And it was hard for me to talk about like, hey, working out, because at the time, like that class was brutal. I mean, it's still brutal, trust me. But like, I guess just as my endurance has built up and as I've increased, it's so much easier for me to talk about, hey, when I started the class, because I've started to see results. Hey, when I started the class, hey, I wasn't in the best shape, or I wasn't as consistent, but it's helped me build discipline. And I think the same goes for, like, if I think about our business, and the people and the clients that have referred us the most are people who have had like came into the business working with us completely lost, didn't have a sense of what was going on in their business, felt frustrated, then saw the tangible results that we actually provided with the information that we were sharing. And when they were then telling their story, because it was coming from a place of success versus, hey, I'm still in this mess and they're helping me through it, there was some sort of progress that they could point to and say, hey, this has improved. And now I feel confident to tell somebody about my progress because I'm no longer there. And you find it even with weight loss stuff. Like nobody asks people who are still like, who have a goal of losing 50 pounds, I've only lost 5 to share the testimonial. Like everybody's focused on, the person that lost 50 pounds. Because at the end of the day, like everybody loves a good success story. And I think at the end of the day, the focus is really on how do you as a client and as a customer, like how do you make your clients and customers feel like when they have an experience with you, they are coming when it's time to talk about your product and it's time to talk about your service, there's a success story that's linked to it. Because I think ultimately that's what makes them feel empowered to be like, man, and it almost like makes them also think like, man, I made the right decision going with this person. Right. It's also like a affirmation that they made the right decision. And so for me, I think really the emphasis on, are your clients walking away with some sort of success story after they use your product or your service, is really going to be the testament of how you can really build and create that community.
Awesome. Awesome.
What
That's a
about
good
you?
perspective because one of the ways that I think about it is, giving them something that they can take away. Cause I also think about like, when I run the Spartan races, I'm not like an avid runner, nor am I like an avid, like, hey, I am all about doing obstacle course races. I do maybe two a year. But it's just that feeling of when you finish and you get the shirt and you get the medal, like it becomes something I think that connects people together to where
Right.
if you
That's
see
good.
somebody with a Spartan shirt, it's where it's just like, hey, that person. Well, the assumption is that person earned it. Because I would say, me personally, like I don't let my wife wear my Spartan shirt. Like, nah, you got to earn
I
your own.
wouldn't. I wouldn't dare. I wouldn't even dare do that. Like, because I remember. I don't remember where I was, but somebody had asked me. Like and I actually see it now when I see people wearing Spartan shirts. I'm like, oh, what Spartan did you run? Like my husband ran that race. I never tell him I did because I'd be lying, of course. But like, it's always like a good conversation starter because there's just kind of this level of like respect. Like, ooh, like I remember when we run the Tough Mudder, I wear my shirt everywhere. Wear pride, and I put my shirt on, and I'm just like, yep, I ran that. Because then, like, especially like people who may have never ran the race, they just have like, it's like, ooh, like these Tough Mudder race marathon people. There's just such resilience. And again, I think it goes to the success story. There's an assumed success story because nobody will say, oh my gosh, I barely even finished that little wall jump when I went through it. Because at the end of the day, it's like, hey, I got the product to show I completed this, or I have like some sort of memorabilia. And it definitely creates like that community feel that you mentioned, Terrell.
Yeah. Yeah. And I think, for a bookkeeping or accounting firm or fractional CFO firm, it's really how do you create that? What's that thing that they take with them? And one of the things we started doing is, or one of the things that I'm noticing as a trend is, several of our clients may be in some type of business coaching program. And I also do coach, law firms through a coaching program as well. And one of the things that I find of building simple like finance tools or like, like we're using Google Data Studio, like a simple dashboard. Cause it's like we
Mhm.
had a client that was he got accepted into this incubator program and they asked about seeing his numbers. Him being able to pull up his dashboard and see the numbers that they were asking for was like, man, other people in the program took notice, like, oh man, like, who are you working with that could give you something like that?
That's
And
the
and I think
alternative.
it's
We should
and
put
I
our
think
logo.
it's
Do we
just
have our logo? We should put our logo on those dashboards. I'm just saying.
and I think it's just one of those things of just finding like, because like I said, when you run a Spartan race, you get a t-shirt and people wear the shirt around or
Mhm.
like, but like we're not gonna have like a bunch of TL Turner group shirts and be like, hey, wear this. But I do think
I
is
actually think we should.
understanding like I mean, we could, but I think what I've seen to be an even more effective route is when you're a lot of our clients may be in, like, let's say some type of coaching program, or they may be in some type of business networking group. And when we provide our clients with the necessary tools that they can easily recall their numbers. So when
Yeah,
they're having a conversation, like let's say, for example, we're working with a marketing company. When our marketing company can talk about, hey, what's the gross margin on, they have a base, a medium, and a premium service. When
right.
they can readily talk about, yeah, the gross margin on our premium service is this, the gross on the base is this, and the gross on the when they can have that conversation and bring that up, I think what it almost becomes like that calling card of people see it like, well, I want to be able to talk about my business that way.
That's
Like,
true.
how can
That's
I be
true.
part of whatever it is that you're doing? How can
Yeah.
I be part of that so that I can talk about my numbers the same way? To where I think that's one way of kind of creating community is turning your clients into ambassadors by giving them the tools so that they can look good talking about their, even if they're still in that process of developing and growing.
Right,
I
right.
mean, if you give them something that they can brag about,
Yeah.
and or tools that help them brag or even just communicate effectively about what's going on in their business, I think it does kind of help create that community where other people are like, hey, well, I want to work with the TL Turner group too. Like, can they help me?
Yeah, and I think also to the point that you made, I think the great thing about finance is it never really, I guess there's always progression. You know what I mean? So you have a further and a further deeper understanding. So even if it's just like you said, the quick recall of my numbers, like if you ask business owners today, like the average business owner, how much money did how much revenue did your business do today, or how much money did you walk away? Like they're gonna be like, okay, give me a second. Maybe I need to go pull this QuickBooks stuff and look at this. But really, if you have a dashboard where you can quickly answer those questions, I mean, it's like night and day difference, right? So I think to you, that's a really, really good point is, are you empowering the tools, your clients with the tools they need to then make themselves and their businesses look good, which then makes you look good, which again is why I think we should definitely have a logo of the TL Turner Group on those dashboards. So I'm
You
going
know,
to propose
that is a
that.
good point because there have been some, some other accounting firms that have seen it and said, "Oh my gosh, like what you guys are doing is great." And plus, like I said, we work with like tools like Live Flow to automate it to where
Mhm.
some other accounting firms have actually reached out and said, "Hey, can you create a white label version of this that we can use with our clients to where we'll, code it, set everything up and design it all in the background and then
Mhm.
hand it over to them to where then they can actually, interact with their clients or whatever." Because I do think I will say I have found that doing stuff like that is a game changer for the client because again, I think similar to how Peloton had to realize, hey, our product is not just a bike. Our product is the community around, exercise, which is where they went from just being having the bikes to then having the actual weights to then where there are more classes that they offer other than just the bike.
Right.
There were some that I saw where they were doing a weightlifting class or like a hit workout, to the, the bike is sitting there, but they turn the screen around on the bike so they can do a hit workout, which it just really reemphasizes the same thing I think for like our business is what, hey, we're not just providing accounting services, we're providing people that comfort and confidence about what's happening with their finances. And
Right.
I think that allowed us to go from just doing the bookkeeping and then sending you a PDF of your financials to, hey, creating these, custom tools to say, hey, here's a better way for you to digest the information. Whereas, if you don't want to pull up a PDF of your P&L, hey, here, look at this dashboard. This dashboard will give you all the important information you need to know. And I think it's just really transitioning the focus from just technical accounting to our job is to help you get comfortable and smarter about making the financial decisions that you need to make and creating a community around that, as opposed to, hey, we're just like every other bookkeeper or fractional CFO. on the market. Like, nah, we're a little different. We offer community around this.
Yeah, no, that's a really good point, and I think I would say the points that you made so far have been really good. I think one of the other things that I would say from this whole Peloton experience, as Peloton has been trying to push very hard on like expanding like their subscription, because like we saw with 2021, their actual sales from bikes were what, like 4 times higher than their
Yeah.
revenue from like the subscription. So I know that they've been trying to push to really sell more of that. And what I would say, I think for me as someone on the financial side of things, what I would advise a business owner, and one of the lessons I would say that you can take away from this is when you're looking at your product and what you're selling, whether it's products, whether it's services, is just really studying your customers' behavior, right? I think Peloton probably knew, someone at Peloton and the executive team probably knew that the pandemic was not going to last forever. And so it was important to think about how do we diversify what we're offering. So what do you think about that first point of just, hey, making sure that you understand, hey, as your customer behavior is changing, making sure that you're adjusting your product offering to match that.
Yeah, I mean, I do think that that is vital for every business, is to really understand like who is your customer
Mhm.
first, and then what are some of the characteristics and the patterns and the habits of those customers. I mean, it's one of those reasons why I'm a very big fan of, you don't want to do business with everybody. You
Mhm.
want to do business with the people that it makes the most sense to do business with. So I mean, that's not accept everybody is not your customer.
Mhm.
Because I think if you accept everybody, it's hard to study everybody. But when you start to
Yeah.
get more specific, like for example, in our case, we decided, hey, we're going to specialize in law firms. The more we focused on law firms, the more we could come up with better strategies, and we can evolve, and we can come up with better ideas. Now, that doesn't mean we don't work with any other type of business. It just
Right.
means that we're focused. And I think when you focus, it allowed us to be able to study the unique challenges that lawyers have. And that's kind of how we came up with some of those easy to use tools. But I
Mhm.
think if we were trying to serve everybody, and you're trying to study, hey, well, what do marketing businesses do? Or what do restaurants do? What do lawyers do? Or what does this type of business do? Like, if you were trying to study everybody at once, I think you would never actually get to the next level of realizing, like, hey, like Peloton did. Hey, when they study their customers, hey, people like working in groups and classes. Right now, people are working at home. But hey, how do we create a community so that when things open back up after the pandemic and people start going back out, like, people can still feel that sense of community?
Right.
And I think that that's something that, as a business owner, you have to understand your customers, understand what your customers are going through. And then I think you have to say, okay, how do we position our product or the next version of our product to meet the needs that our customers are about to walk into?
Yeah, that's a really good point. I think that positioning your product and positioning your next product, because I think sometimes people get so caught up in um, whatever it is they think is the best product to sell to their customers. If I think about maybe some of the clients we've had where they've offered a diversity of certain products and they found that one product has been doing better than the other, I mean, at that point, probably a good opportunity for you to adjust your offering if you see one is performing higher than the other, or there's certain times where your customers tend to come in or buy. How do you make sure that during those peaks, like it's more available so that you don't run out? And I think that really is important. And I think that's where having a forecast is important, which basically a forecast, I would define it as a view of what you're expecting to come, right? Whether it's over the next week, over the next 2 weeks, over the next month. And I think a forecast is so critical for that. And specifically in my experience, like you should be making real-time decisions in your business based off of how you're seeing the trend, not just, from the customer data, like you talked about, Terrell, like understanding the trends. But I think also once you take the trends, like, okay, how does that impact the different planning you're doing your business, how much inventory you need, how much you know, you need to buy, who needs to be working on what days. Like all of those are important. And we've seen that making decisions from that point of view has really helped a lot of our customers, because you're not just operating as you normally would. What's your take on that?
Yeah, I mean, I think it's very true. I mean, the forecast, and I always say this about a forecast, is that it's not going to be exactly accurate, but I do
Right.
think it does give you a idea to frame how you're thinking about the next steps. Because I
Hmm.
think a forecast does, it forces you to sit down to ask the question of, hey, what are the most relevant factors that can cause a change in our business? Like, for example, when Peloton looked at it, hey, the pandemic is a huge factor that impacted our forecast. Like, hey, people are going to be at home more. Hey, Peloton, how we do our marketing and our advertising, let's advertise it as, hey, you're at home. You still want to work out. You can't go to
Right.
the
The gyms
gym.
are closed.
That is
Exactly.
like
Exactly.
that changes, it changes how you do your advertising. Because
Right.
one of the things that I see with a lot of, like, even I would say businesses up to about 100 million, 120 million is usually where I see them. Anything below 120 million I see is they pick one type of marketing strategy. They don't pay attention to some of
Mm,
the macro things that are happening, and they keep their marketing exactly the same. And I think that when you're really doing a serious forecast, you're sitting back and saying, all right, how many products are we going to sell, or how many new subscribers are we going to have? And then you ask yourself, okay, all right, if we think we're going to do 20 million over the next 6 months, okay, what's going to actually drive that to happen? And I
yeah.
think when you start asking yourself those questions and you start thinking about those factors, it starts forcing you to get more intelligent about the business. Like, for example, working with some family law practices. One of the things that, one of the conversations, like, family law attorneys support divorces. Like,
Mm.
okay, during the pandemic, not as many people are getting divorced. But after spending so much time together,
Oh
like
gosh.
when things started opening back up, one of the things that family law attorneys saw is divorce filing started to go up a little bit more. And it's like one of those things, like, I'm not saying like I'm an advocate for divorce, but it's just like, hey, that is a
Understand
factor
your trend.
that
Yeah.
impacts, your forecast. Like when
Right.
you're trying to forecast out, like, hey, the demand for the demand also for, let's say, attorneys who do trust and wills. Like during the pandemic, the need and the demand for people to set up a will or a trust, it shot through the roof, because people
Hmm.
started realizing, like, oh shoot, like, it's not, I mean, I don't know when my last breath will be taken. I want to make sure that my family is taken care of. And I do think paying attention to, like, hey, yes, it's good to set financial targets of what we want to hit. But I think forecasting is a little different, where you're actually looking and saying, okay, all right, what needs to happen, or what is happening that will impact our results, and how do we adjust and really position the business so that we can maximize this moment.
Right. No, that's a really, really good point. Yeah, we do not advocate divorce. But you gotta follow the trend, especially like with the wills and stuff. So I think that's a really good point. So if I was to summarize it, Terrell, because I know we've talked about a lot of things. If I was to summarize it, I would divide, and you could feel free to add in anything here. I would probably say like the three big takeaways from the Peloton story, for me, and advice to business owners is: number one, it is extremely important that you study your customer base. Focus, I think, Terrell, you made such a good point. Focus on the customer base that you want to support, because you can't support everybody, and study and understand how the market is changing and how their behaviors are changing. Once you have an understanding of that, number two, the forecasting. And forecasting is so critical and important for you to understand what you're going to do differently in your business based on what you can expect. Like Terrell mentioned, you gave the example, Terrell, of like the will and trust attorneys, right? Like you probably at that point, if you were a lawyer, you probably needed to hire more staff to support that additional, level of services that were going to be needed. And then I would say 3 is just implementing as quick as you can based on your forecast when it comes to what you're doing in your business, taking that information and making actionable decisions in your business to basically put yourself in a bigger position to win. Terrell, anything you want to add to that?
No, I mean, I think you hit it on the head. I mean, and I think overall, it's just as you look at Peloton, it's really just noticing what are some of the things that they did to adjust, to change, to navigate, and how are they, addressing their issues. And it's going to become very important, when you look at Peloton, because in 2022, they announced that they lost about $2 billion. So the question is, how are they going to navigate moving forward? Because they're going to be making some significant changes, because I don't think they've lost that much money before. So whatever significant changes they start making, is like, as a smaller business, like you may not be doing billions a year, but you can learn from observing what they're going to do and how they're going to navigate it. So I think there will be a lot more lessons to learn, as you watch Peloton over time.
Agreed. Thank you guys for tuning in, and we'll catch you on the next episode.
Hey, it's your girl, Tia Robertson. I'm the host of Entrepreneur Insider. Right here on RETV, every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Tune in to Millionaire Man Cave, only on Relationship Entertainment Television, Tuesdays at 8 p.m.
This is Tyron
and Nicole with your weekly RATV news break. Each Thursday at 12 noon Eastern, we'll come to you with the latest news, trends, and more with a positive spin.
We know there's a lot of positive news that doesn't get reported, but we want to give you the opportunity to share your story here on RATV. If you have a positive news story you want us to share, you can submit your story to news@re-tv.net.
Don't forget to subscribe to to the Relationship Entertainment Television YouTube channel. Download the new RATV Live app on your mobile device and follow Relationship Entertainment Television on your favorite social media platform.
Don't forget, make sure you tune into the RATV News Break each Thursday at 12 p.m. Eastern. Until then, be blessed and be great.
Welcome to What's Going On? My name is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On?